Welcome back to Dukascopy TV. Joining me to discuss global investment is Alain Dargham from Arab Bank Switzerland Limited. Thanks for joining me, Alain. So, with a string of weakening economic data which is continuously being released, how would you say global investments are affected at this time?
Actually, it's not surprising to see weak economic data coming out, because we believe that we are undergoing a paradigm shift of the global economy. And that is characterized mainly by three factors. One is lower growth expectations for the global economy. Second, more correlated and interconnected economies. And third, quantitatively improbable events occurring more frequently or more regularly. On the other hand, if we look at the yields, for example, the yield for high-quality bonds went down to historic low levels, and the commodity complex is still showing signs of weakness. If we take these two factors together, they have to be seen as a very strong sign of the deflationary pressures at play. So actually what we're undergoing is a paradigm shift of the global economy that is coupled with a deflationary environment that makes it very difficult for policymakers to stimulate growth. So in this scenario, the way we look at things is to avoid any impact on our portfolios from this environment. Today, what we do is we favor high-quality bonds and cash over other asset classes while trying to benefit from spikes in volatility.
And what do you see happening to global investment in the long term?
The great deleveraging process has to run its course. It is likely to be a very long process. On the other hand, the biggest risk of the global economy today is a policy mistake, where central banks and policymakers will not be able or succeed in achieving their endeavors. The dilemma today is that, for example, governments stop to borrow, and that would lead to reducing the overall amount of their debt, and to do that they need to decrease their spending, which also leads to deflation. On the other hand, if they continue to borrow at the same rate as today, then we may be experiencing a solvency crisis that would lead to interest rate increases on the long run. This situation is a major concern. It needs to be avoided before a sustainable recovery is nascent.
What factors, if any, do you think are affecting global investments markets right now?
Growth and job creation are well below expectations. The technical picture as well is not improving. If we look at, for example, the equity risk premium that are very high today, they're signaling either a crash in the earnings per share or a surge in the long-term real interest rates. So the technical picture tells us that we are at crossroad, maybe between deflation and solvency crisis, or loss of confidence at least, in governments being able to repay their debt. So this situation is artificial and creates a significant downside risk in market today. Today's valuations, I think they're sustained because of market expectations that central bank will intervene to please the markets.
Finally, Alain, what is your advice to investors of today?
It's very important to keep the mentality of safety and income at a reasonable price. So weakening economic data will continue to support an ongoing bull market in the high quality bonds. This would urge us to look at other scenarios. We currently, for example, underweight equities, but favor stocks paying high dividends with significant earning stability, strong balance sheets, and positive cash flows.
Well, thanks for joining me today, Alain.
Thank you.
Well, that's all we've got time for right now, but stay tuned to Dukascopy TV for more updates and interviews. For now, though, goodbye.